Marco on the podcast. Marco, why don't you give us a self-introduction? I'm sure many people have known you and are excited to meet you. So
No.
yeah.
No, I mean, like, I guess, like, first of all, just thanks for having me, Suki. Yeah, I'll make it quick. I'm Marco. I'm with Primitive Ventures. Primitive is a prop fund. Was started by Dovey in 2017. Now we're actively investing across all ecosystems. I think one thing that we like to pride ourselves in is in helping founders connect the East and West knowledge in crypto. Yeah, and like one thing that I do like to say, just as a joke, a lot of our team members are former US visa farmers, so we do know a thing or two about both sides of the aisle. Yeah.
That's awesome. I have two questions. First, can you introduce more about Dovey? So Dovey Wen is one of the most respectful investor in the space. We'd love to learn more about Dovey. You mentioned like the West and the East. I'm really curious, like what do you mean by that?
Yeah, for Dovey, there's a lot of information online about her. I don't just want to like put words in her mouth, but basically she was an experienced product manager at eBay in the early 2010s in Silicon Valley. That got her into Web2 VC space, connecting, I guess, like SF and the broader China knowledge and intel back then, when she also got into crypto quite early around 2013, or maybe even earlier than that. But yeah, then the rest becomes history. And yeah, she's definitely one of the most OG person in the space. East and West, I can speak a bit more about that. Yeah, so like I guess crypto, our view on crypto is it's a global market first and foremost, even though sometimes in certain periods it might swing more towards like APAC, and then now because of the new US administration it swings more towards the US, right? A lot of people say, oh, it's a US first like industry, blah blah, but I think our view on it is that it's always like a global industry, like first and foremost, and there's like a lot of different players both onshore in the States and also offshore. So we like to help founders connect the dots on like who are the different power players in Asia, in the Middle East, and how do you, like, if you're a founder from the US, how should you look into all of these entities offshore, and how do you deal with them? What's their interests, and vice versa. If you're helping an Asian founder, like how do you understand what's happening in DC, what's happening in like the SF VC like rumor mill? Yeah.
Gotcha. That's super interesting. What do you think about the kind of like many people say like crypto is a geographical arbitrage of regulation?
Yeah.
What do you see that's different that's going on in Singapore versus like the US?
I don't think so. I think that regulatory arbitrage still exists, and it will continue to exist for the maybe, let's say, like 3 to 5 to 10 years. I do think it's getting, of course, harder and harder because either countries are working as a team to make sure that they can understand how these money flows, like all the Hong Kong or the kimchi premium, like Bitcoin, like carry trade that you were used to be able to do, right? Just like between exchanges, like the different Forex rate in 2017, 2016, that's no longer the case. So obviously the window is getting smaller and smaller, but I do still think in the next few, like 5 to 10 years, that opportunity still exists.
Gotcha. I have a question. So for founders who's starting out in crypto, how would you recommend them explore ideas in crypto? And also, I'm assuming that like for Primitive, you guys are VC funds, a prop fund, you have the flexibility to invest in like private market, public market. Also really curious, how do you like divide the effort between, the private market of the world versus like the public market, the secondary market? And we've actually collected a list of questions that founders are
Okay.
and they're like one of the top asked questions is that what are your advice for people starting to explore ideas, whether it's like crypto or not crypto? And yeah, they're really curious, like, how do you start exploring
Right.
ideas and why using crypto?
Yeah, I think that's a very good question, but also a loaded question. So let's try to break it down. I think finding an idea is more about understanding yourself first and foremost, instead of the ecosystem or the space that you're trying to be a founder in. So me personally, and also as Primitive, we tend to look at founder fit above all else. And I think that revolves around both pragmatic things, such as what were your experience that's relevant, what kind of, I guess, like personal relationships and edge, unfair advantage that you might have if you're exploring like a certain verticals. But even outside of the pragmatic reasons, also like more like personal, or I guess like why are you working on this idea? Like how does it relate to, I guess, like your like understanding of yourself and the world and so on. It's going a bit like meta, but I think it's important in terms of finding ideas. Now, with regards to, I guess, crypto ideas, I also think from a pragmatic lens, it's more about what kind of crypto related founders you want to be. So like, do you want to be, I guess, like a CeFi founder that's like using crypto rails, but mostly kind of like Web 2.5? Do you want to be like a pure token founders, right? Like, I think depending on the products that you are working on, and depending on whether what were, I guess, like the past examples of successful exit and also like execution of that product, I think it's very important then to work backwards. Like, let's say like some founders might not be comfortable with like, oh, like I don't want to take the regulatory risk, or like I don't want to be, like a chain founder. I just want to something that's like a business model that I understand more. Then like automatically you already filter down a lot of the ideas that you might initially have in mind. Some founders might say like, hey, I really like trading. I like the business model of just taking high fees, like speculation, blah blah. Then yeah, then you have like a specific direction that you can go to. So like I hope that answers the question, but I think it depends on again your sense of self and how much risk and also what type of founder do you want to be.
So basically finding your own unique strength that you have an unfair advantage over other people. That makes a lot of sense. You mentioned token founder. That is a term that I understand, but our audience may not. And I think a lot of
Right,
people
right.
looking to get into crypto may not understand what's the difference between Web 2.5 idea, you're using crypto
Yep.
rails, but dealing with sci-fi, dealing with centralized entities with compliance and regulatory friendly path versus like what is a token founder? Could you dive into that?
Yeah, this can get a bit meta also, but I think at its core, a token founder means you're a founder of a protocol that is, to an extent, can work as permissionlessly as possible without intervention of the centralized entities, let's say maybe down the line. It might, of course, be much more centralized at the initial stage, but it is working more as a protocol and less like a straightforward businesses. So I think the most easiest anecdotal or just like how to connect the dots, the majority of chain founders, right, like whether it's like L2 or like L1s, those are token founders first and foremost, because even though some of them may not realize or they might not want to say it, the product is their token also, right? Okay, the technology is also the product, but it's like oil allows you to burn fuel and then you can drive a car, right? But oil itself is the product also. It's not just how you use the oil. So that's how at least I personally looked at token founders for the chains. For applications, it's a little bit tricky because I think, again, we are jumping right ahead here, but I think there's a lot of discussion even amongst liquid funds, or maybe because we are in a relatively bearish market, a lot of people are discussing what does it mean to be like a token holder, right? Like, do I actually get rights as like equity holders, blah, blah, blah. And I think more and more applications back then when the US administration was more strict, they were tiptoeing between the lines because they did not just want to say like, look, we are kind of like pseudo equity or anything like, because that's dangerous, of course. But I think now you're seeing more and more are at least doing buybacks. They're like trying to somehow accrue value to the token. I think over time that will evolve and we might see more of a acceptable pseudo equity structure. But that's basically what I mean by like token founder. Your value accrues to the token, and the more up the stack you are, then the more obvious it is, the more down the stack in terms of applications, and it may be a little bit gray and like where's the line. But yeah, I would pause there for now.
That's fascinating. I think that most people don't realize quite yet. I think a lot of applications in crypto still have the kind of quote unquote centralized component or the off-chain component that itself is not purely just on-chain. Especially, I
Right.
think if you look at applications, most applications, at least at the very least, the front end is off-chain, right? People use AWS to host the back end, and people use the whatever they do for the front end, which is more or less centralized. So you can like control kind of users or volume or whatever. I would even argue a lot of the perp dexes, they have the oligarch
Yeah.
off-chain, and even for pump fund, I think the graduation was like off-chain, or people can manually kind of do it. So that's actually very, very interesting. And you mentioned the future for tokens is gearing towards more, what does it mean to be a token holder? Does that give
Yeah.
you voting rights? Does that give you like governance votes? Do people care about governance votes? If you look at crypto, I would say crypto products, there are not that many that generate revenue. Forgive me for saying this, it might be
No,
controversial,
that's true.
but
That's true. Yeah.
like if you look at crypto as industry, there's not that many products or protocols or chains that has the quote unquote PMF, except for the
Yeah.
the token itself as a product, and the product is the price chart. So where do you see the kind of like tokens going
Mm.
into the future? Arguably hyperliquid. I think another protocol did like buyback, hyperliquid, like
Yeah.
gave somehow trading fees supposedly back to the token
Yep.
holders. And that's actually pretty hard for like US based companies to do
Yeah.
and not be categorized as a security. Although I
Yes.
hope, like that's a future.
Things change. Yeah.
But yeah, I'm curious about how do you make sure that token accrue more value, like views on tokenomics generally speaking? What does it mean tokens?
Yeah, I might sound like a broken record for some of my followers that have been following some of my writings for like 2 years, but I tend to keep it simple because, okay, my background was I was also doing research, but I think a lot of a researcher in crypto tends to maybe overcomplicate the designs and all of that. Like, and the way to, for at least my opinion, to answer your question is very simple. Yeah, like eventually it needs to make money without incentives, and then money needs to accrue back to token holders, whether that's by rev share, by dividend, by like equity plus token warrant. Like that's why like no one wants to do just pure SAFT anymore, right? It's like there's like a lot of risk like in that. So I think let's just keep it like simple. Like it should, like let's say if like Uni, like initiates its like fee switch, and it's not just a UI but like at the protocol level, it should accrue to the token holder. And how you handle that, that's kind of like up to you, right? Like a lot of equities do dividend, a lot of equities don't do dividend, but you have claims to it. I always it's not really a joke, but like the number one test or like analogy that I often share in this kind of discussion with friends is that if tomorrow I convince a billionaire to acquire 51% of Uni token, can Uniswap Labs listen to whatever I have to say? If the answer to that is no, then we're not at that level yet, right? Because like that's effectively is like what activist investing is, right? Like in like the equities market. If you looked at like Elliott Management, that's what they do, right? And then right now no one wants to do it because they know they don't have a say. Like I'm sure there's like some billionaire kids like somewhere that look, oh, like if this protocol is making like 300 million and they're like FDV is 3 billion, maybe I can buy 1.5 and I can own this, but you won't really own it. So that's why like no one's buying it on the market right now. So like that's my like very simple I guess like logic thesis, I would say.
Yeah, you actually touched on a really, really interesting point here where for Uniswap, there's the Uniswap Labs that built the protocol, and then there's Uniswap Foundation. And that's quite
Yeah.
common for a lot of the
Yeah.
like crypto companies to have the labs and which is more centralized, building the technology. And then when they launch a token, because of the like regulatory kind of constraints, they set up the foundation, and the foundation will like be the token issuer. And I
Yep.
think the same was also true for like Solana. There's Solana Labs, and then there's like Solana Foundation. So
Yeah.
I think it's really interesting because like most crypto companies that are protocols that have grown to be huge kind of always took the approach of being centralized first and then decentralize it later. Do you have anything like do you have any views on that in terms of like can it be decentralized day one? And are you actually gonna decentralize it? Like just like you said, right? Uniswap, I'm fairly
Yeah.
familiar with the team and like
Yeah.
Hayden from way back
Yeah.
when. And I would say that right now, like, there's Andreessen holding the Uni token,
Yeah.
there's like their
Yeah.
investors, there's like Hayden, there's like the team, and it's more or less decentralized, I think, for the Uni token. But in the same time, like I think the decisions are still made in like a
Yeah.
centralized manner versus like the kind of more decentralized way of like different people holding a token. I actually look into this. So I was a data scientist at Electric Capital, where
Ah.
we look
Oh
into
yeah.
a lot of the on-chain data for Uniswap. And in the case of like Uniswap, like especially when it comes to governance votes, it turns out that people don't really care about the votes. Like the
Yeah.
max amount of votes that they got for like governance votes was like 124
Mm.
votes for like
Oh
a
wow.
Uniswap level decision, and that was the max.
That's crazy.
So
With like 124 like what like entities voting?
yeah, entities like
Oh,
people that
right,
voted.
right. Hmm.
And
Hmm.
it's just really interesting. I don't know. I don't know personally.
Yep.
I don't know personally like where the revenue goes, but I'm assuming it's like going kind of like the protocol's revenue goes back to like building the company or building the lab side.
Yep.
And I think actually this was the information from a couple of years ago, but their I think their revenue or their company is still run by the VC funding that they raised. And it's still like a kind of like a pretty separate entity between the foundation and the labs.
Hmm. Hmm.
This might be too much information, but
No,
yeah,
that's what your listener is like. That's why they're like listening to you, right? It's all of these info.
I don't think people really care about governance votes, and I don't really think that Uni
Right,
token
right.
holders are getting the fees
Yeah.
that Uniswap is making. So
Mhm.
what are we getting? We're getting the
Yeah.
speculation. We're looking at the SEC lawsuits, and like what else
Mhm.
are we getting for like Uni token?
I mean, I have a couple thoughts on that. Like, I think 124 entities, I think is okay because like even in equities, right? Like all the index funds are voting for the people that are buying the index funds. Like if you have an Apple stock, like you're not voting directly, just like as a shareholder of that stock, right? So like I think it's kind of okay if as long as like those like entities are like quite, I guess quite distributed. I think it is more about just yeah, maybe like we are a bit like I don't just want to like double down on like Uniswap like continuously as an example, but I think more and more like over time people are starting to see that hey, DAO governance is actually very slow. So like just going back to answering your question, like do I think you should start being more centralized? I would say for sure. Like I think if you go decentralized from like day one in terms of the decision making, you're not going to make it. But I think it's like over time. And I recently saw a lot of people were kind of like arguing against buybacks and blah blah, right? And I think there's no like one size fit all answer as to like when should you do it or is it a bad choice or not. But the main argument that I often see of people against buyback is like, okay, you're a startup, right? You should use that money to grow, to spend and grow, spend and grow, and grow your top line, right? Like the Uber model makes sense. But there are two things, right? Like one, it takes Uber like what, like 13 years to like actually catch up with that spending, and
Yep.
yeah, and then two, at least for them, the top line grows linearly or sometimes as fast as the spending, right? Because that's what you want. But I think in crypto, we sometimes see that it's the reverse. So they're spending more, but the growth of the revenue is less than the growth of your marketing spend. And to me, like if you're at that stage, it's kind of like, okay, you at least need to take a step back a bit and like be like stare at the mirror and say like, are you just growing for the sake of growing, or like you're actually not growing and you'd like rather be a bit more conservative for like a few quarters, like a few years, and like if you have a new product and you want to spend marketing on it, then that's fine. So like I think it's mostly around like there's this argument that you need to always just like spend, but maybe like if you don't have a new product or maybe if you don't have like a significant pivot, then that is the short-term limit of like of your time, right? So like unless you see actual rocket fuel, like whenever you spend $1 in marketing money, like you see $2 in top line, right? Like, if you don't see that, then what's the point of like spending more? So I guess yeah, that's my cynicism. We're in a bear market.
Oh, you said it. So you think we're in the bear market right now?
I think from an altcoins perspective, yes. I mean, just don't listen to me. Just like look at like others or like Total Three at like TradingView, right? Like we're not as bad as like 2023, but we're like down to like Q2 2024 level before the meme coin mania in Q4. So I think it's hard for alts right now. Yeah.
Alts, you mean meme coins or like,
I think
VC?
almost everything. So like Total Three, I guess for your listeners, like Total Three, if you go to like TradingView, that's the total market cap outside of Bitcoin and ETH. Yes, outside of Bitcoin and ETH, that's Total Tree. And then others, that's the total market cap outside of the top 10. So like others is much worse because it excludes Solana, excludes Ripple, and like all of the Dino coins that have like recently been pumping. So like others is really bad. It's like down to Q2 2024 level. Yeah.
What do you think about meme coins?
Well, I mean, just like overall, are they good? Are they bad?
So, Bitcoin has reached 100K, and now I think it's down to at the time of recording. And I'm curious, actually, I'll rephrase the question. So, do you think we're entering a bear market? Do you think we're in a bull trap? Do you think meme coins will come back when it comes to volume, or do you think we might see like other narratives spinning off when it comes to
Yeah.
altcoins? And when we're saying
Oh,
altcoins, it's like any coin that's not like Bitcoin, Ethereum, Solana.
it's a tough question. I am definitely leaning more towards that. I'm leaning towards more. There's more downside in the near future than upside. I do think for I guess like for Bitcoin doesn't really matter. That's where like we're still seeing like pretty good like bits and like level of interest. Institutional activities is actually very very good. Like a lot of like custodians, banks are making products, right? So like I'm not concerned at all. But I do think the like what we saw from the meme coin mania in Q4 and Q1 shows that it's getting faster and faster. Like the boom bust cycle is smaller and it's getting faster, and I don't think that's a good thing. I don't. I can't predict like if I can, I would be retired by now. But like one thing that I often think about, and we also sometimes like discuss this in the firm is the 4-year cycle still a thing, right? Because it feels like now even though everybody's still bullish on Bitcoin, it's not as easy to argue that for all of these altcoins, especially when there's no easy money from the government. Now again, if if Arthur Hayes is right and Fed just prints again, like blah blah, then we might still see another like mania from like a few quarters. But we don't know how long that can stand because retail is getting smarter and smarter, right? Like in the last cycle, like everybody wasn't selling their pool to rewards like right away. They're like, oh, this governance token has some value. Let me like hold on to this like food finance token. But like now, I think even retail is getting smart. Like they see a 5x, they're just gonna sell like at least half of that. So I feel like everything is getting more mellowed until we see somehow like either new money game. So that's like from the fundamentals perspective, or on the fundamentals, we see more interesting financial products like off-chain yield tokenized bringing on chain, or just more like actual revenue and blah blah. Until we see that, I'm leaning more towards it's definitely looking a bit bearish. Yeah.
Yeah, that's fascinating. I think like I don't know which cycle it is for you, like this cycle in terms of your career, but I think over the cycles, like people are like more and more fighting if something's not going well. And I don't know if you remember in like 2018, right? Like people still believe that, oh, Ripple is gonna be like the intermediary of
it's
banks
the
and
Swift replacement. Yeah, I know, I
exactly. And
know.
people who got the Uniswap token, even when they sold, but like people had conviction back then about decentralization, about like this
Actually,
being the
yeah.
future of finance. And like when DeFi first popped out, and then we had the blue chips of DeFi tokens like Aave, Compound, like Maker. They're still like way up there, I would argue. But there's definitely the kind of like Lindy effect when it comes to consumer,
Yes.
right? Like these tokens have survived multiple cycles, and people have already like bought and hold, and like they have like a community with like as time goes on. Whereas like a lot of the newer tokens that get launched, if you don't have the kind of exchange listings and like backup, and like different market makers make sure that you're doing enough volume on some of the centralized
Yeah.
exchanges, then there's nothing that really holds people's conviction, and people kind of just like, if it goes up, then people like ape into it. But like if the second that starts like dipping, everybody sell, because there's not really any kind of
That's much
reason to hold
conviction.
it. Like you don't want to be left as like holding other people's bags. And I would say like I think meme coins has like kind of made that game even like easier than NFTs. Like NFT was
Yeah.
like
Yeah.
more
You
illiquid.
still need to at least draw.
Yeah, you need
Yeah.
to you need to draw. Like with meme coins,
Yeah.
I can take a picture of like anything and like launch it.
Yeah. Yeah.
And all I need to do is just to tell my friends, yo, like, oh, I heard this, like, spread rumors, and then like
Yeah.
it's gonna pump. Um, and do you see this changing? And if so, how would you like this to change? Like I think we talk a lot about like the kind of financial innovations. I think crypto is very much like the innovations of assets like launched on chain. I'm asking
Yep.
for myself and also for users, right? Like, what do you think could be, and like, or you hope to be the next iteration of like assets on chain?
Yeah, so let me try to break down the question. So, like, I guess the next iteration of assets on chain. But before I answer that, I think I have a much like my opinion on, I guess, like the a weaker conviction or like shorter boom bust cycle. I'm actually more pragmatic about it because like some like OGs, like again, like I'm not that OG. I'm like 2017, 2016, but like some people would like argue like, oh, crypto is getting much more like, I guess, commercialized. It's like now you have to work with like Sexis and TradFi, and there's not as much of like the OG just like conviction of the technology can change, blah blah. While I do think some of that is true, maybe I'm a bit too rational in how I think about this, but I feel like it just boils down to like two things. Like one, it's just the market cap. The market cap was a lot smaller. It's as simple as that. That's why like it's easier for like things to move, right? It's like you're investing in something that was like way smaller in terms of like magnitude. So just a little bit of money can move things around and can create the wealth effect and get the conviction. And I think we are starting to see the second part of that is a lot of these like OG DeFi tokens, if they do have value and they become like backbones. Again, I don't have any like Aave backs like personally, but like it's clear that they are like now like going to be like one of the backbone of, I guess, like DeFi yield and like all of that, right? We're starting to see like liquid funds bidding it, all of that. I think it's just price discovery. Like really, I think it's very similar. So like to like the second part about conviction, the way that I see it is just very similar to, I guess, like Web2 startup companies that went public at a sky high valuations and then they dumped very hard. And then, but now they came back with like stronger fundamentals and stronger, I guess, like newer sets of holders of that tokens that now wants to buy it because they think there's value in it. So that's just my read on it. I guess like your next question is around like what kind of new asset issuance that I want to see. The most TradFi answer, or like the most like boomer VC answer that I can give, is really more and more just like, can it replace more of the global financial system? So like I know like these days, like you're a VC also, so like I'm sure you've seen a lot of like decks on around like forex or like stablecoin, like forex powered stablecoin or something like that. I think what we have seen, T-bill is very easy to like tokenize because it's intangible asset, right? It's just digital, it's just bonds. And then I think like that's kind of the same with like forex. I think where it's going to get harder is like commodities and like all of these like physical assets. We have seen what, like maybe there's like 100 companies trying to do like fractionalized real estate since 2017. Like no one has worked, right? Like I don't know if they're gonna work, but I think we are just gonna like go out the risk curve more and more. I think we will start with like private credits, like a lot of people have like PTSD with, I guess, like the like, I don't want to name names, but like, yeah, there's a lot of protocols that did not do that well in the last DeFi summer around like credits or like loans, all of that. So like people have PTSD, but I think eventually crypto is just going to be seeking more and more yield off chain that's getting tokenized, and then they're going to find a way to better distribute that and to make it faster. So that's like on the financial product side. On the like other stuff, I would say, I mean, the dream is still really to be able to launch ICO in a, like I have an idea, I can just share it, I can get it, and then it's fine, right? Like that was like the original dream from 2017. I still think with like Echo, Legion, and other platforms, we might see that again. It's just that I always find it like quite tough to see how that is going to be implemented to businesses that have physical option components. Like if you're not like just like a crypto business, or you're not like a payment business, you're not a protocol, but you're like I don't know, like even Deepin, it's kind of hard to align that once you have non-physical component, once you have physical component. Like anyway, I've blabbered a lot, but like yeah, that's what I have to say.
Yeah, I agree. Let's bring ICOs back, man. I miss those days. I think the space is moving towards a slightly more kind of compliant, like QIC-ish component for like ICOs. Because, like I would argue that a lot of people or a lot of protocols don't want to launch a token if their tokens are held by, like criminals or people who's like trying to launder money. And that's where I think that the QIC component like comes in and like help out. Even with meme coins, right? If you want to trade with applications or credit cards, they're kind of using MoonPay. Like MoonPay would QIC you like effectively to like make sure that you're legal to buy these tokens. Do you think that's against like the kind of permissionless nature of crypto? Like for example, like at platforms like Echo, I've heard actually many people. I was asking them, they're like, oh, we're thinking about launching token. Like many people like talk to me when they're thinking about like launching tokens. And the more recent kind of narrative slash story that I'm hearing from people is that they're thinking about just, get a community, don't raise another VC round, and just do like a ICO style, like an ICO. That's like pretty fascinating to me. I feel like in crypto, it used to be like you need to raise, like for traditional startups, right? You need to raise like pre-seed, like maybe angel pre-seed, seed, and then Series A, Series B, and then up to like Series like E or plus, and then you IPO. Like that used to be like the dream for startups. But I personally haven't seen any interesting IPOs in the past couple of years. Even like the companies like Stripe. We actually know the founder, and then he's like, why IPO? Like, it's a private, highly profitable business. Like, why should they IPO?
Yes.
So I think like for crypto companies, the cycle is much shorter and much like quicker. But in the same time, like why are people raising less rounds than before? Before they like launch a token? Do you think that cycle will be like quicker and quicker?
No, like I just think because it's healthy. I mean, like I have a lot of thoughts on this. This is just such like VC talk right now, like between both of us. But I do think that like one, even if you looked at the Web2 side, staying private for longer is a trend that, again, I think let's just be very pragmatic. Being a public company sucks in the US like equity markets, like a lot of responsibility, a lot of like pressure, blah blah. If you're super profitable private, and now there's more and more like PE, right? Like why would you go public if you don't really need the money? Like, but at the same time, the meta argument, I guess, if we just like talking more about like society and blah blah, it's like now because of the lack of IPO, there's a lack of wealth creation. So like all of the wealth creation is in the private sector, right? And you have to have certain access if you're not in crypto. Like even in crypto, you sometimes need to still have access, but in like Web2, it's even worse, right? Like you just can't get into like random Series A if if you don't know people. So I think in crypto, the same thing has happened, especially post 2017 ICO, because a lot of people, got like sued by the SEC, blah, blah. So the pendulum swing towards VC funding, right? But then I think then became too much VC funding, and then now combined with like more, I guess, like clarity, I guess, as long as you can KYC, you can raise from like 5,000 people from like Echo, let's say, right? So I think to answer your question, why they're raising less round and like smaller amount of money are two things. One is simply because they do realize that they still need to create that wealth effect to have a community, because like otherwise no one wants to buy your tokens, right? If it's too expensive at TGE and just go straight down, that's bad for everybody, bad for the team's optics, bad for the exchanges, because their retail users get fleeced and they don't want to trade, right? And they will trade less, and it's also bad for like all of the token holders. So I think it's just a reaction to the market not rewarding those tokens launching at high valuation, that they're kind of forced to settle with the lower val. One last thing that I would say on this is I think also because depending on the type of product that you're launching, a lot of the products in crypto are actually, dare I say, with Cursor, with all of these like new AI tools, they're like bootstrappable, unless unless you need to get licenses, or you need to go to like Sensen for like DeepIn or something like that. Like unless you need actual money to produce stuff, and it requires a lot of capital. I would argue maybe PerpDex is, it belongs to that side also. Like you need money for like market making and so on. But the majority of like other more, I guess, like consumer facing toolings, swaps, money market, you can bootstrap them. So I just don't see like why you need to raise like 20-30 million for this kind of thing. It's mostly I would say mostly, if they're still doing it, it's mostly for strategic, because I think still some of the VCs have better connections when it comes into like TVL provisioning, like these kind of things. It's a bit harder unless you have like specific super angels. But yeah, but there are not a lot of super angels in the space. There's only a few of them. So yeah.
Yeah, for sure. I think we've seen like more companies raising pre-seed and fewer companies like raising Series A and beyond. That has been like kind of like the general trend that I've seen with crypto. And I totally agree with you. Like, if you can stay profitable and like be private, like why not do that? I agree. I don't think it costs that much to build any products. You kind of just need a couple of engineers. And I think the last cycle, man, did I just call it the last cycle? Are we officially? You're right. Like I think
Oh no, get knock on wood.
I think in 2024 we see in products with a team of two, right? Palm started as a team of two, Moonshot was a team of two that just achieved the kind of network effect. And with the right distribution, you really just need like a product and get it in front of like the right people. And I think raising like VC funding, mostly it's more for like, distribution. And on that note, we'd love to have you maybe tell us a bit more about Primitive, and how does Primitive help founders with distribution, the go-to-market, or like, what is the benefit of taking, say, like Primitive's money versus like other VCs or other investors?
Yeah, I mean, I guess the biggest differentiator was what I said at the beginning. I think because we're a prop fund, we can be extremely candid with the founders. We don't have to play politics or like write thesis to raise our future funds and play the management fee game. So like we tend to be extremely honest with the founders of like what's happening behind the scenes, at like the different parties, and I think founders really appreciate that. I think another thing is just because again we also admit our like limitations. Like we are not like we don't have a lot of I guess like people, so a lot of our help is more around like strategy and like narrative positioning. It's like we're not gonna like contribute code or something like that. Like that's not what we do. So we mostly like help you think and connect the dots with like the different parties and here and there. And I think because we do really understand like the entire, I would say, like how things operate in crypto and like the liquidity supply chain and so on, we have a lot of like references in terms of like sometimes we help founders like hire their like eco lead or like APAC lead and so on. So that in itself is also like I guess like one pragmatic thing in how we connect East and West. And I think above all is really just like because we also don't have a mandate of I guess like, oh, we must spend 20 million by the end of the year and then so we can raise our next fund next year, right? Because of that, we can be a bit more selective and we can be much more hands-on with our founders. So in terms of like giving like relatively quick turnaround cycle for like product feedbacks or like fundraising feedbacks and like all of that, it's we're like basically sometimes we act as like Dovey has said this, like sometimes we act as like a part-time co-founder if like needed, but I would say that's like typically on a much more earlier stage of the project. Yeah.
That's awesome.
Yeah.
Can you name 5 tokens that you think have launched really well?
Wait, have launched really well this cycle.
Or
Man,
just generally speaking, like 5 tokens that you look at them and be like, oh, tokens should launch like them.
Well, I
Actually,
get a
let's
shield.
make it easier, like maybe just 3 to 5.
Yeah, okay. I just get a shield 2 of our own backs, but I think it's objectively good. Is INA and movement, right? They're like one of the better TGEs.
What's the first
TGEs in
one?
this cycle. INA,
Yeah,
Ethina, and movement.
Athena, yeah.
Yeah. So I think to think about this because like I was trying to remember like what TGEs I saw. Like it kind of depends on like how far back we go. Like I would say GTO was good. Like they pretty much kickstart the bull market. Yeah. So that was good.
You guys
Jupe was also
invested in-
yeah. Jupe was also good, I would say. And I think above all, I know recently there's like some drama with like different blah blah, but I think the level of communication that they did when they launched it, yeah, I would say just those 4 for now. Yeah.